This is a review of our trading the April gold on Friday, February the 17th for most of the trading session throughout the morning. Gold oscillated between support and resistance that we had mapped on our screen. And my approach is to wait for these areas to be violated in one direction or another, and then try to enter in that direction, which means that at this point, for example, at about 9:30 Eastern, the market started to break to the downside and then return back into the area of significance, this being today about 1732 and a half. When it did that, and we look for specific things that we talk about during the course of the day in the trading room, but it did unfold to meet our criteria for getting short, which we did 2 contracts with the idea of taking one off at our first target, which was about at 28. So getting short in here at about 32 and a half, 33, taking the first contract off at around 28. Our target for the trade was down here at 24, which we did get to, and pretty quickly and directly in this gold once it did break out of this trading range. And that's one of the things that I really like about this trade is that after a period of consolidation, it's almost like compressing a spring. Once it goes, and if you can manage to get in the right side of that move when it does go, it goes pretty quick and pretty direct, and in this case, right to our objective. So we had just the one trade for the day, and that was this one. It did generate a profit for the day trading the gold, and so for a pre-holiday session, not bad. I trade it the same way every day. I look at these same type of trades every day in these 3 markets as we go through them throughout the day: the euro, the gold, and the S&P 500. And when they line up in just this way, we find this very similar result. So again, just another example is that if we wait through these areas where you can really get chopped away, that we're well served.
This is a daily review of our trades for February the 13th on Monday, trading the euro. Starting off early in the session, as always, we always map our levels. We have resistance here marked in red at 32.89, and then support between 32.53, 32.54. And 32.46, in and around that range. And for most of the early morning session, the trading was pretty much within those 2 boundaries. What we look for in that situation is a breakout from outside this very tight range, in which we started to get here at about 9 o'clock Eastern. And what we look for at this point is a break away from it convincingly, to break away. And we talk about specifically what that is in the training room. And then we look for a retracement back to the area in which we can get short from. Our stops are on the other side of these levels because we see them as significant. Getting short 2 contracts with the idea of getting one off about the time that we take out the previous pivot low, this low in here, which we did, yielding about 20 ticks in here. And our profit objective is down to the next support level, 31.93. We finally made our way down to about 1.32. I took position off at that point. It's a little after noon, 12:30, 12:40, and for a nice profit for the day. And that was the only trade for the day. So our areas enable us to define where we want to trade, where we want to stay away from it. We wait for a break outside of the range, and then we act, just like we can